Everybody, this is John, and welcome to the free video. And for today, let's look at two stocks here. One is Netflix. So Netflix here, you can see on a weekly chart, obviously has just been exploding higher. And on a daily chart, it's just been trading sideways. However, today we did get some buy signals on it. And we actually have 195-minute squeeze setting up, 78-minute squeeze setting up, and a 39-minute squeeze setting up. So when I see something like this, where you're starting to see squeezes on all those smaller time frames, not necessarily the daily, to me it's an indication that the trend wants to continue. And from here, typically you can come up and retest the highs and potentially make new highs. So I'm looking for about 632, 634, buying some calls that expire next week, and then also selling some put credit spreads. And of course, you could also do some call debit spreads. Okay, so I like that. And then the other one is for AMBA. So AMBA, we had a nice run with this one. We bought it on this daily squeeze and a little bit after, and then this thing just ran. It hit our target at 93. We took profits on half yesterday, and then got out of the rest today before earnings. And then, so what I found a lot of times is that when a stock like this is headed into earnings and has had a good run, typically the move's priced in. So in this case, we just sold an iron fly. So what that means is that we sold when it closed, the at the money call on the put, and then just bought some protection just in case it did have a crazy move. And then the idea with that is you can actually collect premium, right, and get the implied volatility crush. I was trying to think of the term there. It was implied volatility. So getting that crush. And then the other stock I like here is Baidu. This stock is just having a really nice move, and kind of like Netflix on the smaller time frames, you've got some nice squeezes set it up. I'm just looking here that we can actually retest 204.57 if we can get through there. Then we've got around 206, and from an options trading perspective, that is a nice little run there. And then taking a quick look at the markets here, the stock market continues to trade sideways, but other asset classes are having some pretty volatile times here. The dollar index today just got whacked $1.50, which is a big move for the dollar index. And so the question is how is that going to impact the markets overall? And I just continue to emphasize that I just, on the long side here, really like stocks that are just ignoring what's going on in the general market, okay? And there are, if the stock market goes down, 85% of stocks are going to go down. So what I really like is, especially like this morning, when the NASDAQ was down like 30 points, which stocks were up on the day or which stocks were fighting the trend. And, Baidu was doing really solid. So there's order flow going into that, okay? And so that's the kind of stuff in this kind of market that I want to look at. If we look at something, like Google, and not so much. I mean, this thing to me, even though you've got squeezes and things here, when the market's down, a lot of times Google tends to be down, and it did manage to buck the trend a little bit today, but I'd be more inclined to sell an iron condor on something like this as opposed to making a directional bet. All right, so very interesting times coming up. Okay, so one of the questions that we're getting is, hey, we saw the webinar last week on the stock class you're doing Saturday. What is it about? So it's a couple different things. A big part of it is a specific system for finding this kind of stuff. And I say dismiss because this is based on hedge fund demand. So here's a stock, CRVL. It goes from $5.44 to $24.69 in 1 year. If you put $1,000 into it, it's now worth $4,500 bucks, right? So the idea is, how do you recognize, and it's not a squeeze because when it's a $5 stock, the squeezes aren't as critical. They're good, but there's other factors that come in. But what we're looking for is a stock that can get pushed through 10 bucks, because at that point, that's when the hedge fund demand starts. Okay, we're just trying to get in on that early. Another example of that is EBS, went from 464 to 27 in a year. Same thing here. Once it got through 10 bucks, it just took off. Okay, hedge fund demand. Put $1,000 into it, now it's $5,800. So this is actually great for smaller accounts. You don't have to sit there and watch the market all day. SCSS, 19 cents to 35.60 in 3 years. $1,000 invested is now $187,000. Okay, so So the idea with this, and this is actually a common pattern like this, when you have these stocks like this. Now, this is rare. It's very rare that you find like 19 cents. You're really looking more like for $5. But sometimes these will trigger, and it's the same thing. It's that first, there's that first fight to $10, okay? And then the next fight is once it gets through $10. That's typically when the big gains come. And so the idea with this is that when I show people this, it's like, okay, well, you might be thinking, yep, okay, that's pure luck, and it would never happen to me. Or only hedge funds would know to stick with a stock like that, or that would be impossible to find. It would be impossible to know when to get out, and these types of moves never happen anymore. Okay, and that's fair. The other way to look at this, though, is just kind of think, hopefully you might also think, well, maybe that would be possible with the right approach. Maybe if I do just a little bit of what the hedge funds are doing, I can bring in a little bit of what they're bringing in. Or maybe it's worth it for me to at least be open-minded to see how they do this, right? So the idea with this is it's actually deceptively simple, okay? So this is the process. Out of the 197 industries, you find the top 10 industries for growth. This rotates typically once a quarter. Then we narrow the young company growth stocks within those top 10 industries. From there, we get the highest relative strength stocks early, get into those early. And then on number 4, we monitor hedge fund activity and footprints as they, with their superior information, because they're going to have way better information than we are about the pipelines of that company and future orders and things like that, we move into the next big thing with conviction. And finally, we activate alerts to let you know when to get in and when to get out. So the idea with this is that even though it's simple, it's not easy, okay? There are, of course, a lot of details that you have to know to make this work for you, but overall, the idea is that that makes sense, right? So the class I'm going to be doing on Saturday, and you can go here, you can sign up, you type this link into your browser, simplerstocks.com/blueprint. It'll also redirect, and you can also call us at the office, 512-266-8659, and you can also email support@simplerstocks.com. And there's essentially 2 classes. There's a Saturday class, okay, and then there's an upgrade for more of a mentoring type live trading environment, okay? So the Saturday class is coming up, so you want to block this date, Saturday, June 6, 2015, from 2 to 6 East Coast time, okay? Now, if you can't make it, that's fine. It'll be recorded. Now, if you want to kind of turbocharge this process, there's an additional 3 full trading days online, and that's June 9th, June 11th, and June 12th. Okay. Now, a 3-day mentorship normally costs $5,000, but we're packaging this up so that a person with a small account could actually do the upgraded portion of this as well. Now, with kind of the turbocharged mentoring, there's 2 bonuses that come with that. First, there's 2 free years to the Simpler Stocks Growth Scanner. Okay, this is a new scanner. It's going to be released with this class. It's going to be $47 a month. So over 2 years, that's $1,128. But this is the scanner we put together to kind of take a lot of the work out of finding these stocks. Now, this is different than the current scanner. The current scanner we have is more for finding like, oh, there's a squeeze on Netflix, right? This is for finding when hedge funds are actually getting into these smaller stocks. And then bonus number 2 is that once you get through the class, you actually have a credit for a 20-minute one-on-one coaching follow-up, okay, just to make sure that you fully understand everything. So if you go to simplerstocks.com/blueprint, it'll take you to this page. So the Saturday class is just $297, okay, and then the 3 days of mentoring is $997. Now that includes bonus number 1 and bonus number 2, and it actually also includes the Saturday class, okay? And you can go to the page and look at it. This to me is a no-brainer. This is a new thing that you're going to learn that you've not seen before. And then this, you could say, if you like, okay, that's a great idea, I want to do it. That one's up to you. But we're also going to be doing things here that we're not doing on Saturday. For example, managing positions, also using options, doing no-cost callers, covered calls, essentially, how to acquire stock cheaper using puts, okay, different things like that. but it's focused on stocks, but during the live trading, we're going to use options to kind of enhance those stock techniques. Okay, so all good stuff there. This is going to be a great class, and looking forward to seeing you there.